you only expect one rate hike this year. Why?
So we see a number of reasons. So we've been a little bit below consensus with regard to rate hikes for 2017. So first is the growth outlook, with growth disappointing slightly in the first quarter. And second of all, we don't expect policy or Trump's policies, whether it's tax cuts or greater fiscal expansion, to really take hold in 2017. And what we've seen is that many market analysts have been downgrading not only their growth estimates for the U.S. over the past few weeks, but also their interest rate forecasts from 3 to 4 hikes to now 2 to 3 hikes.
Although this week, though, we do have some positive data coming out of Germany, also coming out of France, the dollar rebounding, we're seeing 2 sessions of gains. Are you saying that this may not be too sustainable?
No, I think the Eurozone economy is starting to pick up a little bit of steam, which is quite positive over there across the pond. But I think what's important is the U.S. economy for the Fed. And what we've been seeing is also talking about the tapering of the balance sheet, for example, or the shrinking of the balance sheet. That could be equivalent to 1 or 2 rate hikes. Depends how fast they do that and when they do that. It's still unclear to us. Perhaps we'll get more information about that when the minutes are released from the last meeting.
Chadwick, I want to switch across to emerging markets and to the story emerging out of China specifically. Moody's then moving on the rating, a cut for Chinese debt with a stable outlook. Now, what I've put up on a chart is the situation when it comes to that. Our clients can pull it up on their Bloomberg. Lovely perspective here. Your white line, that's your China GDP year on year. Your blue line, that's your all-system financing aggregate, and you can see that pop towards 2016, 2017. How concerned are you about this latest assessment, Chadwick?
So we're not particularly concerned about the change that in Moody's assessment. They had already been on negative watch, for example. Other rating agencies had moved years ago. And this question about debt, higher debt levels and slower growth, which are 2 of the things that Moody's refer to, are nothing new. So we've been talking about higher debt levels and a structural slowdown in China. So it's not really anything surprising. I think many market participants had been expecting this.
In terms of currency strategy in the emerging market space, how would you trade that basket at the moment?
So in terms of emerging markets, let's say against the dollar, we're neutral to constructive, I would say, depending on which currencies. We've liked the Malaysian ringgit for a while, for the past 2 months, for example. We've liked the Mexican peso for a good few months now, since mid to late last year. We've also started to like the Philippine peso a little bit more as a strong growth story, low inflation outlook. So we like quite a few EM currencies. We recently changed our view on the Chinese yuan. So we had been bearish for the most part of 3 years. So since early 2014, early 2014, we started to be quite bearish. And that view has played out. And actually now we think that a lot of the negative news is priced in, and we expect more of a neutral and some potential for some gains in the Chinese yuan, but we're broadly neutral from being bearish previously.